We need to talk about the Magnificent Seven.
Magnificent Seven.
Magnificent Seven.
Magnificent Seven.
You've probably heard of them, the giant tech stocks: Apple, Amazon, nvidia, Microsoft, Tesla, Alphabet, and Meta. These 7 stocks have come to dominate the US markets, making up almost 28% of the S&P 500 by market cap. So the movement of these 7 mega cap tech stocks is having an outsized impact on your returns as an investor. Did you know that through 2023, Q1, Q2, Q3, if you stripped out the mega cap tech stocks, or known as the Magnificent Seven, the S&P 500 would be pretty much flat. So the outperformance of these 7 mega cap stocks is hiding the basically flat returns of the S&P 500 this year to date. But this doesn't just impact US investors, this impacts the rest of us around the world as well if you hold globally diversified index funds. American stocks make up almost 60% of a global market index, with these Magnificent Seven potentially making up a large chunk of that as well. This chart from the FT shows that US stocks have been on the gradual rise over the last decade as a percentage share of a global index fund, with some index funds having the Magnificent Seven making up 17% of them, and Apple alone 2.5% of your entire stock allocation. So what's happening to the rest of the global stock market? Why are these 7 stocks and the US coming to dominate? Well, I've done a little bit of digging, and there's a couple of reasons that I want to flag up and highlight to you that might make you just sit and think. The first reason is that overseas markets seem to generally be valued at a lower rate than US markets, or you could say the US markets look very overvalued compared to the European markets. But why would investors have lower valuations for European stocks than US stocks? Well, it could be as simple as growth. If you're expecting a company to grow, you're expecting its earnings to grow, the amount it pays you out in dividends to grow, and its share price to grow. So you want to be investing in companies that you see as having good growth potential. And it just so happens that a lot of those are based in the US and North America at the moment, with European growth sluggish and the US really surging ahead and seemingly brushing off any bad news that comes across. So with the lower valuations in European stocks, should we be piling into European stocks, or should we be sticking with our globally diversified fund, or sticking with a US-centric fund that has the Magnificent Seven? In other words, should we ditch the Magnificent Seven? I want to look at a couple of reasons for ditching the Magnificent Seven and a couple of reasons against ditching the Magnificent Seven. Here's my thoughts. It'd be great to hear yours below in the comments. So what's my first reason why you should keep the Magnificent Seven? Well, my first reason is that I think investors have woken up to the possibility of AI. When OpenAI released ChatGPT to the general public, it gained 1 million users in 5 days. That made it the fastest growing application by users, except for Meta's Threads, which we could talk about how the users were just imported from other applications on that, which maybe skews the data a little bit, but it likely means that it was the fastest growing application by some distance. AI has the possibility to unlock massive growth and productivity potential for companies and individuals. And if you were a company, if you could have an AI assistant helping out an employee and have that employee generate an extra £20,000 in revenue for your business, what would you pay for a subscription to that AI package? If you could pay £5,000 and get £20,000 in productivity boost from an employee, why would you not take that? And who stands to benefit from that? Well, the Magnificent Seven: nvidia, Apple, Microsoft, Google, and that could see explosive revenue growth, especially if one company of those Magnificent Seven comes to dominate. Think about Microsoft's share of the operating system platform. Think about what you might use at work. It's probably Windows. So suddenly billions in extra revenue for Microsoft's bottom line just for using their tools. And as everyone comes to use their tools, it will entrench its market share and just become more and more dominant as the AI top dog. The second reason I think you need to not ditch the Magnificent Seven is that they're so entrenched in our daily lives. I've got a couple of notes below here just to summarise some of the big areas. So Amazon controls 70% of e-commerce in the US. Google controls 90% of search in the Western world. Microsoft Windows controls 70% of the operating system in the Western world. Apple's iPhone has a 20% market share in the phone market just from one product, and the list could go on. But it's not just their consumer-facing sides that are really strong and really growing. Think about their business side as well. They own a lot of the infrastructure that our daily lives run on. Think about Netflix. So much of Netflix is hosted on Amazon Web Services. You may remember a few years back when Amazon Web Services, or AWS, went down, Netflix, the BBC, a number of other major service providers just stopped working because of AWS going down. A shift away from that doesn't just happen quickly. Microsoft controls a number of deep sea cable routes across the Atlantic Ocean. Think about how much internet data traffic travels between Europe and North America. Imagine if they were severed or Microsoft didn't control them. Who would? Think about nvidia. It's been on an absolute tear this year. It designs, builds and sells a lot of the most advanced AI chips in the world, used not just for business, but consumer and military use as well. Google takes 58% of search revenue worldwide. If you add in YouTube, commonly cited as the number 2 search engine in the world, that number only grows. All of this is really compelling, and as Warren Buffett would say, they have really big moats, not just in their products and the amount of data they have on us, but many of the Magnificent Seven hold huge cash reserves, meaning they can just buy up competitors as they come out. So what's the case for dropping the Magnificent Seven? Why might you consider getting rid of them from your portfolio? To be honest, I only see one reason why you might consider that, and that's if you think valuations are really overstretched. The average price to earnings ratio for the Magnificent Seven is 35, with some much higher and some lower than that. 35 is really high compared to historic trends. For the US market, the historic trend has been around 18, so the Magnificent Seven are around twice the valuation that you would potentially expect given historic norms. High valuations aren't generally a problem if the company can continue growing at breakneck speed. That's what investors are relying on, and that's why investors are piling in now, expecting growth to follow. But what if competitors arise for the Magnificent Seven? What if products come out that they can't compete with? Well, firstly, I think that's quite unlikely, but if it does, then these companies would just replace the Magnificent Seven at the top of the market capitalization. So will I be dumping the Magnificent Seven? I've decided not to. I think the benefits outweigh the costs. I think tech will always be a growth driver in the economy. It's what so much of the modern world is built on. And at the moment, I just can't see strong competitors for the Magnificent Seven in so many sectors that they dominate. They also have so much data on us and so much cash on hand that I just can't see them falling from the top anytime soon. If you've enjoyed this short video, please give it a like and subscribe to my newsletter that's in the comments below. There's a bit more market data, market analysis, and you can follow my journey to a £1 million portfolio. Remember, nothing in here is financial advice, it's purely my opinion. Please do your own research for your own investments. Thanks for watching. Bye.